Hello and welcome to the show with me, Jillian Godsil. My guest today is Remi Tuyaerts, who is the co-founder of Alluo.
Alluo.
Say it for me. Say it for me, Remi.
Alluo.
Alluo. Remi is Belgian French, and he's chosen this very difficult name, but probably on purpose because it means that people will not forget it. What's it? What is that? That funny name. I know that. And Alluo is DeFi for the non-tech guys, which is really interesting. But before we get on to your project and you're the founder of this project, I really like your background. As a student, you did some really incredible things. Just tell me a bit about some of the good projects you did on your year out in Malaysia.
Yeah, so I'm a computer scientist by trade. I studied in Nottingham Uni in England, and then in my second year, I did a year in Malaysia as part of an exchange with Nottingham. And so in Malaysia, I joined an organization called Enactus. Enactus is a student-led organization. The point of it is to build social enterprises with local population wherever you are in the world. And so I guess we called COO, but it was very, it's a student-led organization. We had about 45, I think, students, something like that, that were working on this. And we built 3 different projects, 3 different businesses. At the end, they were full-on businesses with revenue and all of this. One of them was a mushroom farm. So we're rehabilitating abandoned houses into mushroom farms with the local Aboriginal communities. The second one was a black soldier fly farm. So was the idea was to recycle organic waste using black soldier flies, which are a specific breed of flies, and then feeding the larvae of these flies to the chickens and the porks that people were raising in their homes. And then the last one was to recycle plastic to make bean bags with homeless people. So I did that for about a year. It was really interesting, and I guess that's the first real companies, I guess, that I built. Some of these are still running today, but yeah. So yeah.
Amazing. Well, I was saying before we were recording this interview at the start. What I love about it is the social enterprise aspect of it. So they're real businesses. You're getting your hands dirty, whatever, learning how to set up a business and all the things, and they're still going and they're making a real impact. As I was saying before, if you died in the morning, put that on your tombstone, you'd be very happy. But as it happens, you have a lot of other businesses. Before we get to Alluo.
Yeah.
See, I have to do the eyebrows there. So tell me about some of the other businesses that some of them you were worked with, some of you co-founded.
Yeah, so I guess the most prominent one was what I did in my last year of university. I've been in the crypto space since about 2013. So my first year of uni, I started buying Bitcoin, and at the time it was just a fun experiment. And then because I'm a computer scientist, I got interested in the tech, and so I got deeper into it, started mining and stuff like that. And then and so in my last year of uni, I met 2 brothers who wanted to build something, completely non-tech guys, but they had an idea to build something. And the original idea was to help small and medium companies in the UK to get better access to finance. And so we didn't know what we were doing. I knew nothing about finance when we started that first company. As a matter of fact, I don't think I even had a bank account at the time. So really very, very new to this. And so we wanted to use technology to do this. And so we used a combination of blockchain technology and open banking. It's PSD2 regulations in Europe. We built this company for about 3 years. Very quickly, we dropped the blockchain aspect of things for very clear reason, is that the space just wasn't ready for what we wanted to do. So a lot of what we're talking about today, RWAs with MakerDAO and real world assets on chain to fund loans and stuff like that, we were thinking about all of this back then in 2017, and we wanted to do this. That was the idea. So that business went pretty well. We built this for about, like I said, 3 years, and then we got acquired. So by the time we got acquired, we were a pretty small startup with 7 people. We didn't have any revenue, but we did a pretty decent exit, and we got acquired by a large private equity. And then the company just blew up after that. So I stayed on as CTO for the company, and we ended up merging with a bank in the Netherlands. And I think at the end, there was, between the bank and us, there was probably around 350 employees. And yeah, and so that went really well. Everybody got was really happy, but it kind of distracted me from the blockchain space, because obviously I was running the tech side of this business. And yeah, and so at the end of by a year after the acquisition, I was, starting to think about, okay, what could I do next? I'm not, I'm a builder. Like, I like to build stuff from scratch. I like to, get my hands dirty. I like, and when you start running a big business, you kind of get away from that. And so yeah, so I started looking somewhere else. I started looking back into the blockchain space, because I was like, well, I mean, I've been investing and I've been helping projects on the side, but I've never done that full time. The main reason I didn't want to focus on it full time before was because I always felt like the space is just not ready for a consumer proposition. The promise of blockchain, of decentralization, of non-custody, of owning your own money, is awesome, and this is really what I would, I fully adhere to. But the problem is the tech, the market acceptance, none of the tools to build the technology wasn't there before we started Alluo, to actually build a consumer proposition. And when I say consumer proposition, I don't mean MetaMask that is used by 10 million people. I mean, a Web2 fintech kind of experience that is used by hundreds of millions of people. Tech wasn't ready to do that. So I look back at it and I was like, okay, maybe now we're getting there. There's a
What year was this then? You thought that the tech and
so since 2017, I always felt like we're not there. And then about a year and a half ago, maybe 2 years ago, I was like, okay, maybe we're getting there. It's still very difficult. It's still very challenging to build a consumer proposition that really sticks to these core principles of Web3, but it's doable. And so yeah, and so that's when I started Alluo. Alluo, the idea is more than just DeFi for the masses. The vision is how can we democratize the access to financial services? So really, an example I like to use is, why can somebody that live in Africa, let's say in Rwanda, not have the same access to financial services than somebody that lives in England? Forget how much money they have. Just by the fact that they don't live in the same country, they can't access the same financial services, which is crazy to me. We live in a world where in one click you can call somebody for free on the other side of the globe, yet financial services don't behave like this. Somebody in Africa is not able to open a bank account, and therefore is not able to have a credit card, and therefore is not able to buy stuff online and get a mortgage and get a loan, and so on and so forth. And so it keeps keeping them in a low state where I just don't understand. Well, I understand why it's like this, but it shouldn't be like this.
and why
And so
hasn't
that's
it been
really
fixed? Yes,
yeah, somebody needs to fix this. And yes, crypto is a way to fix this, but there's so many other problems that we need to solve around this, to actually make this right. And so this is what Alluo is trying to do. How can I build something that somebody in England can use, but somebody in Central Africa or in Southeast Asia or in South America can use exactly the same way?
So explain to me the mechanics of the platform. What are you doing?
Yeah. So today we build two things. We try to solve this problem in two main ways. The first one is a non-custodial mobile wallet that looks and feel like a neobank. So it's a mobile app. You can download on Android and iOS. We've been live since about February. You can go on it. You can deposit money.
Money or crypto?
Money. So
Money.
that's the thing. It feels like depositing money. In reality, the mobile app uses a network of on-ramps to convert your money into crypto, and the mobile app just deals with crypto. And so this is a key point here, is that Alluo is a DAO, so we don't have financial licenses. We are not allowed by the FCA or the SEC or anybody to touch money. But we can touch crypto because so far, at least, it's not regulated. And so
Can
yeah.
people put their crypto on
You could
app?
put your crypto, but the idea is that it's not for somebody to to know about crypto. I really want to give the app to the average Joe in the street, and without them knowing that they use crypto, without them wanting to understand crypto, they have all the access that crypto gives. It is non-custodial, fully non-custodial. The private key is stored on the device. You can find it if you want to. You don't have to if you don't want to. And it gives you access to all these DeFi benefits. So today, there's two main features in the mobile app. The first one would be a high interest current account, I guess. So I think today we're giving 5% interest on US dollars. We're releasing a new feature, I think, in the coming week, which will be the ability to stream money to people. This will enable a lot of other stuff afterwards. So streaming would mean paying every second. So think about a subscription fee. Think about paying a friend over time. You could send them money every second, basically.
And what's the
Um,
advantage of sending money every second as opposed to sending a lump sum in one go?
because that money is earning interest.
Ah,
Instead of saying, okay, I owe you £100, can I pay you over 2 months? If you have £100 on your bank account, on your Alluo account, you'd be able to stream it to them over 2 months, and while it's streaming, you're still earning the interest.
so I
Yeah,
guess two big questions that need to be asked.
yeah,
First of all, you are DeFi, not CeFi, because obviously over
100%.
the summer we've had the collapse of CeFi.
Yeah,
And for ordinary folk, for the same people you're trying to reach out to, how can you assure people that you're DeFi and not CeFi? And secondly,
yeah.
how are you able to offer those interest rates, which are considerably higher, although interest
Hmm.
rates are increasing in the real world, in the fiat world. But so
Yeah.
if you could answer those two questions, please.
Yeah. So, I mean, it's difficult to ensure that we're DeFi and not CeFi without going quite technical. But we can go quite technical. The way I always like to explain it is that it is fully transparent, but you don't have to look deep if you don't want to. So the point is that an interested person would be able to find their private key in the mobile app, would be able to find their public key in the mobile app, would be able to see all the transactions that happen on chain. All of this is completely transparent by design. But if you don't want to understand any of this, you don't have to. So, if you don't know the mobile app today, you go to your profile page, you go into the settings, you'll be able to see your public key. And then if you take that public key and go to a block explorer, you'll see all the transactions that happen. You see that it's signed by your private key. Alluo has no play in this. We don't even have a backend. So, in computer systems, you have a front end and then you have a backend. And the way companies like Celsius used to work is that they make it look pretty in the front end, but then they own your money in the backend. They own your private key in the backend. We don't even have a server. We don't even have a backend. So there's no way for us even to do that, even if we wanted to. So that, I guess, that's how I can guarantee that we're DeFi.
Mhm.
Your second question
Yeah,
was
how can you offer such
the
interest
high
rates?
interest.
Mm.
Yeah. So the high interest is realized by the second thing that we're building, which is a liquidity direction protocol. And so again, now it's going to get quite technical, but but I'm more than happy to go into it. A liquidity direction protocol is basically a community of people that own the Alluo token. Alluo token is tradable on Uniswap, Balancer, all the main exchanges. And so what they do is they manage the deposits or the liquidity that comes via the mobile app. So somebody that comes into the mobile app deposits money, the money goes into the protocol, and then people that own the Alluo token manage this money. And when I say manage, they invest that money into different DeFi strategies. So today we support Curve, Convex, Harvest, Aave. And so the Alluo community every 2 weeks decides, okay, we're going to put 10% of the total liquidity into this specific liquidity pool on Curve. And then we're going to go on Convex, and then we're going to compound it. And then we're going to put 20% because we want to be a bit less risky into this other Harvest pool, and so on and so forth. And so all of that aggregates. We make some level of APY as an Alluo community. We've made up to 20% APY. And then we give 7% of that 20% to the mobile app depositors, and the Alluo protocol keeps the rest, and the rest is redistributed to all the Alluo voters, basically. So one key thing that I want to mention, before you ask your next question, is that all of this happens fully on chain. So the voting happens on chain, but also the execution of the vote happens on chain. And so that's super key, because you have, for me, you have a lot of projects today that do on-chain governance, but then the execution of the vote, like actually making it happen, is controlled by a company or is controlled by a private key. This is not the case for Alluo. The whole process happens fully decentralized, fully trustless, fully on-chain. And we're really proud of that. It's a very hard problem to solve technologically. How do you make this happen in a way that cannot be attacked and that, you know, won't fail, because ultimately we're playing with millions of dollars. But yeah, so today I can say that it does happen.
Okay, I was going to ask you then, how do you manage your risk
Mhm.
profile? Because that was part of the problem too with the collapse of CFIs over the summer, that
Yeah.
the risk profile wasn't maybe judged. It was
Hmm.
careless. How do
Yeah.
you manage that?
So I think the maybe the problem that CFI had, companies like BlockFi, Celsius, and all these guys, is
Mhm.
not so much that they didn't manage their risk profile. I think they knew what they were doing.
Mhm.
Maybe it wasn't super transparent internally and with the regulators, but they knew what they were doing. It's more that they didn't have any reporting obligation to their community. And so when you were putting money into BlockFi and Celsius and you were given 5% or 7%, 16% APY, you just, it felt almost guaranteed. It was like, you know, I'm going to get that money. But in reality, there were super, super risky investments behind the scenes, you know, leveraging up and investing into infrastructure and like stuff that the community didn't know was happening. And so that's the big difference with Alluo. It's not so much that we manage our risk better. It's more that all the risk that we take by design is on chain. So if one day, you know, the community that votes was to go crazy and we start taking super high risks with the money, everybody would be able to see this. And so this is where I believe very strongly in the game theory that if we do this, the community will just tell us, whoa, whoa, what's happening? Like, and they'll vote against, you know, whatever we're doing, to whatever the core team is doing. Yeah.
That brings in another thing. So you're saying this is DeFi for the non-tech guy.
Yeah.
How will the non-tech guy get involved in the governance if they're not techie?
Yeah, so they won't. I think the idea is we really have two users. We have the non-tech person that will deposit money and forget about it and use Alluo as a current or maybe a savings account, and you
Mhm.
know they don't need to worry. And then you have the tech person, the person that somewhat understand what blockchain is. Of course, we're trying to bring these two users closer together, and by doing a lot of education and making this whole voting and governance process as easy as possible. But ultimately, as we're not even remotely close to make this happen, you know,
Mm.
just to be able to vote, you need to understand what a token is, have a MetaMask, go to Snapshot. Like it's still a process, but that's
Yeah,
okay. There are
yeah,
people that love to do this.
yeah.
So yeah.
What, in general, then, this is a sweeping question, but you'll probably get a sweeping answer. Are tech guys who are doing the voting on the risk, where are they on the risk profile? Are they, are they Olympus
Mhm.
DAO, or are they, you know,
Yeah.
Maker
I
DAO?
mean, today we have about 250 people that hold the Allure token, and therefore 250 people that have the power to vote. This can go up and down according. You can go buy the token today,
Mm.
and you know be part of this governance if you want to. It's completely permissionless, and so I can say that today the DAO is actually very conservative. As a matter of fact, today the treasury is subsidizing some of the interest that we're giving to the depositors. So think about it like this. We've got two sides of a balance. On one side, we want to attract capital by giving a high APY, 5, 7, 10, 15%. And on the other side, we make some level of return with the DeFi strategies. Today, the DAO is voting for attracting more capital and taking less risk. And so actually we are using some of our treasury to subsidize that part of the balance.
Is that sustainable?
It's not it's how most banks would work, you know, or most financial institutions would work. It's you don't want to do this forever, because obviously at some point the treasury will run out of money. But what's, you know, it's a calculated risk. We make less, we pay, if you want, it's a customer acquisition cost. We pay money for people to come in, and hopefully at some point we have enough deposits to be able to, you know, go the other way around. So yeah.
How is the treasury acquired, and is there a figure on it?
Yeah. So the treasury it comes from the difference between the advertised APY
You
and the
didn't raise
realized
any money.
APY.
You didn't do.
No, but we did raise money to get started.
Okay.
So there was a token pre-sale in, I think it closed in January, around January the 15th this year. There's a $5 million pre-sale from investment DAOs, but also traditional venture funds, a bunch of angels. And so this is how I guess we seeded the protocol.
Mhm.
But again, all of this happened on chain.
Yeah.
It's very transparent. If somebody wants to go see, we have nothing to hide.
The pool of people that are doing all the DeFi work,
Yeah.
what's their experience and where do they come from?
That's a good question. And I wish I knew the answer. I don't, because that's the beauty of it. The point is that anybody can do it. And so we have people today that vote. I have no idea who they are. I've never met them. They just vote. They have a vested interest to do this, however, because if they don't vote, if they vote for something that loses money, then the stake in Alluo that they've used to vote is going to get sold to make up for that difference. And if they don't vote, they don't make that difference in advertised and realized APY. So you see what I mean? It's like it's a game theory again. You vote, you have access to that difference. You don't vote, you don't get access to that difference. If you vote wrong, you lose the stake that you've put to vote.
So the people who are doing the DeFi are the people in the DAO. It's not like I had this vision of like a back office. I know you said you didn't have a back office, but of
No,
traders shouting and doing stuff. And no, this is
no, no,
actually
no.
people. Oh, that's fascinating.
It's completely managed by the community.
Now, what happens if you have some lunatics in there?
Well, they to be able to vote, like I said, you need to own a lot of Alluo tokens. So
Well, some
obviously,
rich lunatics.
but then they will lose their money because if they vote for something that doesn't, let's say some shitcoin that has a 9,000% APY on some weird chain, fine, that can work for a bit of time. But at some point, that's going to get rug pulled, and then that rich lunatic will lose all their stake that they've bought in Alluo to be able to vote for that thing. So it's like you would need a lot of capital, and it would be, how to say, it's not financially, it's not a good idea financially to do this because you'll just lose money. So if somebody wants to attack us for the sake of attacking us, then that's doable, of course. But that's the same for anything. If somebody had shit tons of money and would be able to buy most of the Ethereum staked, and they could attack the chain, but then would lose that money, obviously.
Yeah.
So yeah.
Interesting. So with that in mind, okay, and I mean, I think people listening and watching will have a feeling of the type of man you are. What is your vision for finance in particular? Because that's what you're tackling
Yeah.
in this one. What's your vision?
I really feel like the financial industry is actually not that bad. As in the products that exist today are not that bad. The problem with it is more that people don't have access to it. Normal people don't have access to it. And normal people don't have the transparency to understand what's happening. And so it's a lot of trust that needs to happen in the current financial system. I feel like if we build similar kind of products, similar but on a better infrastructure from the core, as in whatever happens in Web3, whether it's Ethereum or another chain, I'm not fussed, but in a better infrastructure, in a transparent, trustless infrastructure, then everybody would benefit from this. And so this is why I'm not actually against the traditional financial system. I think it works. It's just that it's completely hidden, and it's very obscure in what's actually going on.
Controlled by a
Exactly.
small number of people.
It's controlled by the few.
Yeah.
Where if you just do the same but controlled by the masses, then it works. Because if you think about what Alluo does with the difference of APYs and stuff like that, this is very much how a traditional bank works. A traditional bank, you have deposits. You go put your money, you get 0.02% interest, or maybe now you get 1%. And then what does the bank do? They go on the other side, they go make a mortgage, or they go do a big loan, or they go do an investment. They make 3, 4, 5%. And then they make the difference between whatever investment they made and whatever they have to give you. If they can't give you that interest, they go sell equity on the market, try to make up for the difference. This is how a bank works. Like, this is how Celsius tried to work. This is how Alluo is working. But Alluo does exactly the same, but everybody can see exactly what's going on. There's no
and you don't
way.
own, it's non-custodial. You don't own the money.
Completely non-custodial. You want to get out, you get out today.
For
I
a non-financial man, you know quite a lot about the financial world, I would say, and you explain it in a nice way. Question for you. One of the things that I when I look at this sector, I mean, it's great to have a deposit and earn a return.
Mhm,
But what about, and you did it earlier with one of your other projects, what about access to credit? So do
mhm.
you have a plan in the future that customers can get mortgages and loans, car loans, business loans, or
Yeah.
mortgages from your platform?
Yeah, so lending is an interesting problem. Today in the blockchain space, in the Web3 space, all the loans the major lending platforms are over collateralized. Yeah, so you're going to take an asset and you're going to put 150, 200% of value of that asset to be able to take some money out. This is very much this is okay and it works fine, but it's not a super sustainable way to getting loans because it means only the rich can get loans. If you have a lot of assets, then you can get loans. If you
Yeah.
don't have assets, like in the normal world, people get mortgages because they don't have the amount of money that they need to buy a house. It's not
Mhm.
because they have more money and so they want to use it. No, it's because they don't have the money, and they want to pay it over time. So this question of lending is not it's not something that Web3 can solve on its own because it's a risk question. How do you evaluate the risk of each asset? And doing that in a decentralized way is very, very difficult. You need loads of risk committees and so on and so forth. So I don't think Web3 on its own can solve the problem of lending because it's how do you evaluate the risk? That's more the question in lending. Now, we are thinking about, as an organization, we are thinking about how could we enable um, future returns and stuff like that. So, for example, I mentioned streaming payments earlier. Something that we're thinking of is could you borrow against a stream? So, for example, let's take the example that I did that I talked about earlier. You're streaming £100 to your friend over 2 months. Your friend needs the money today. Could your friend take a loan against that stream? Because we know the money is going to go. It's
Mm.
set on chain. The money is going, and pay, let's say, £5 for the privilege of having the whole amount today. You could do that. And so again, these are forms of lending that we're thinking of. But yeah, mortgages, car payment, car loans. I think it's the challenge is not what happened on chain. Is how do I evaluate how risky your house is, or is it a good car, or
Yeah,
that's the
this is
problem.
the first time I've had a proper answer to that issue. And it makes sense. Of course it does. I mean, there is the risk profile. Will I pay back the money or not? Oh,
Exactly.
okay, it's really cool. Where are you on your roadmap now? So you're
Yeah.
live, but are you in stealth mode or are you
Well,
going
no. So we've been live since about February,
to?
and I can get, but we haven't been marketing Alluo as an organization very much. The main reason for that is a big problem, a big challenge. It's not a problem, it's solvable, but a big challenge that we had is how do we bridge that gap between normal your bank account basically and Alluo? Because
Mm,
remember, Alluo is only stable coins, like we don't touch fiat. And so the original thesis was okay, we'll use on-ramp partners, people like Transact, MoonPay, Ramp Network, Zanpo, all these guys. And they will do the conversion between fiat and crypto, and then we'll handle the crypto afterwards. Now, we've been doing this since February, and without throwing too much shade on anyone, the experience is just not remotely good enough for what we want to do. It's still very crypto. Like it's very difficult to understand today for a non-crypto person. Why do I now see this MoonPay people? Why do I have quotes to buy crypto and then my quote expires and then I have slippage? Like what the hell is going on?
mm,
And so in the app today, we don't feel happy with the experience our end users get. And so that's why we haven't marketed the app, because like until we solve that, there's no point trying to market to the average Joe if all we're going to get is customer requests on like, what is this MoonPay? What is USDC? Blah, blah, blah. That's
mm.
not what we want to do. And so we've recently announced a partnership with a company called Unblock. It's a new on and off ramp platform that enable free white labeled and instant on and off ramp in 35 countries, 35 currencies. And so very soon, what you'll see in the Alluo app is you'll be able to do a wire transfer. If you're in the US, a wire transfer. If you're in England, faster payment transfer, and instantly you'll get your money on chain, instantly for free. So you'll buy crypto USDC for free. that doesn't
Oh.
exist today in the world. And so once that is solved and that goes live in the app, then we'll start advertising and showing, because at that point we really feel like the experience is there to
Mm.
go to mass market. So that will happen. We're part of ETH ETH Global event in San
I was
Francisco.
going to say you're going out to meet people now and put
Correct.
the
And the idea is to start marketing all of this
yeah,
after ETH San Francisco. We want to announce and we want to show what we're doing there. And hopefully that will enable us to, really start scaling up the app, and bring it to everybody that needs it.
amazing, amazing. And you're going to be successful because I still Alluo.
Alluo.
Oh, I know Alluo. I have it. I
It's
got it.
like it's
Alluo.
like Aloha,
Oh,
but
loo. Oh, I'm
Alluo.
thinking loo,
Yeah.
toilet. The slang. Alluo. Alluo. Oh, excellent. Well, I have to say, Remi, a fascinating conversation. I love what you're doing. You've actually explained a couple of things to me that actually make sense, that haven't been explained to me so far. And I think you're going to go far, as they say. Well done.
Thank
Thank you
you.
indeed. Thank you.